Today, we are not just selling grain, we are shaping the future of Burkina Faso. This $14 billion partnership with India is proof that our land can feed the world and secure lasting prosperity for our people.
It was early morning when the story broke, just as the sun was rising over Asia. Markets in New York and London were only beginning to stir, traders sipping coffee in anticipation of a routine day. Then, a single headline flashed across news screens and rattled the financial world. Burkina Faso, a small landlocked nation in West Africa, had signed a $14 billion agreement with India to supply maize and sorghum over the next decade. The deal would send 20 million metric tons of grain from African fields to Indian ports, a move that few had anticipated. Burkina Faso had never before been regarded as a major grain exporter, while India already stood as one of the world's largest food producers. Why such a deal, and why now? Those questions quickly dominated newspapers, television studios, and trading floors around the globe. The financial response was immediate. Grain prices surged within minutes, with commodity markets in Mumbai, Chicago, and London humming with urgency. Futures for maize and sorghum jumped as analysts were pulled into live broadcasts to interpret the news. Some hailed it as historic, others as a game changer in global food security. Exporters in South America and Eastern Europe, long dominant suppliers to Asia, looked on with alarm as Burkina Faso emerged unexpectedly onto the world stage. Yet the official announcement was brief. 3 paragraphs, stark in detail: 20 million tons, $14 billion, 10 years of supply. Sometimes the simplest words carry the greatest weight. Behind the numbers lay strategy. For India, the deal represented insurance. Its agricultural fortunes are bound to the monsoon. Good rains bring bumper harvests, poor rains bring shortages and soaring prices. By linking with Burkina Faso, India built a safety net against unpredictable weather. For Burkina Faso, the agreement was opportunity and recognition. Once defined by gold mines, cotton fields, and political struggles, it now claimed a new role as an emerging agricultural player. The world was reminded that even a landlocked African nation could influence global food flows. The roots of the deal stretched back years. Burkina Faso had quietly promoted its untapped agricultural capacity at global forums, while India sought to diversify its food sources, wary of climate risks. Early talks focused less on money and more on trust. Indian officials inspected silos, met farmers, and scrutinized supply reliability. The greatest challenge was geography, Burkina Faso's lack of direct access to the sea. To deliver millions of tons of grain required complex logistics across borders and ports. What seemed an insurmountable barrier became a test of partnership. Both nations agreed to co-invest in railways, roads, and port facilities in neighboring countries. Infrastructure, once an obstacle, became a symbol of collaboration. On paper, India appears food secure, producing hundreds of millions of tons annually. In reality, its harvests fluctuate wildly, storage systems allow waste, and droughts force costly imports. Burkina Faso's different rainfall cycle offered India a form of climate insurance. When one struggled, the other could compensate. But the deal was about more than weather. India pledged not only to purchase grain, but also to strengthen Burkina Faso's farming base with silos, irrigation, and training. Unlike other powers that tie trade to political influence, India framed the agreement as a partnership of equals. Trust, built through smaller trades in textiles and pharmaceuticals over the past decade, laid the foundation for this leap. The political message was clear. For India, the deal was a chance to assert leadership in Africa, an arena where China and Gulf states had moved aggressively. For Burkina Faso, it was independence choosing India over traditional buyers, signaled autonomy and ambition. Excitement rippled through West Africa, where neighbors began to ask if they too could leverage fertile land into global deals. Analysts predicted more African nations would invest in silos, ports, and railways to follow Burkina Faso's example. But in South America and Eastern Europe, the news sparked anxiety. Exporters feared losing market share and hinted at price competition ahead. Still, many economists argued the shift would strengthen global food systems by diversifying supply. Domestically, Burkina Faso faced a critical question. Would exports undermine local food security? The government moved to reassure citizens. A fixed share of production would remain at home, while revenues would subsidize prices and fund irrigation. The plan aimed to raise overall yields, balancing domestic needs with global ambitions. Beyond human food, sorghum promised to reshape animal feed markets. India's booming poultry and dairy industries rely on cheap, steady feed. Securing long-term supply from Burkina Faso meant stabilizing not only food for people, but also protein for millions of households. Infrastructure development added another dimension. India's investment in roads, silos, and port access would fuel broader growth in Burkina Faso, benefiting industries from mining to textiles. For both nations, the deal became more than agriculture. It was a development strategy and a hedge against climate shocks. In a world where trade is inseparable from politics, the $14 billion agreement sent a message. Smaller nations could command global attention with the right partnerships. India could chart its own food security path, independent of traditional suppliers. And Africa's potential as a breadbasket of the future was no longer a distant idea, but a reality in motion. The deal's success will depend on execution. Burkina Faso must deliver without compromising its own needs. India must ensure infrastructure and logistics meet demand. Climate, markets, and politics will test the partnership. Yet, if sustained, the agreement may become a model for trade in an uncertain world, diverse, resilient, and rooted in mutual respect. A headline that began with surprise has unfolded into something more profound. A reshaping of how nations think about food, risk, and cooperation. From a landlocked corner of Africa to the tables of India, the ripple effects of this pact will be felt for years to come.